Marvel's origin traces back to 1939, when pulp magazine publisher Martin Goodman founded Timely Publications in New York City. The company evolved through several name changes, notably Atlas Comics in the 1950s, before officially adopting the Marvel Comics brand in 1961. In 1996, the mighty Marvel Entertainment wasn't a superhero empire. It was a company drowning in $610 million of debt. The comic book market had collapsed, and Marvel stock had fallen 93%, from Wall Street darling to financial disaster. But what followed wasn't the end of a story. It was the greatest comeback arc in corporate history. Marvel made a radical decision: stop being just a publisher and become a movie studio. It wasn't just survival. Marvel would go on to reshape global entertainment itself. That reinvention led to a $4 billion acquisition by Disney in 2009, and a cinematic universe that would earn over $30 billion at the box office. The crash was caused by a combination of a bursting market bubble and aggressive corporate mismanagement. In the early 90s, the comic industry artificially inflated sales by catering to collectors who bought multiple copies of issues, believing they would increase in value. But when millions of rare copies flooded the market, the illusion shattered and the industry crashed. Marvel's sales plunged 70% in just 3 years, a collapse faster than any supervillain attack. Owner Ron Perelman tried to build an empire, borrowing heavily to buy unrelated businesses. Trading cards, sticker companies, over $700 million spent on assets that soon became nearly worthless. When the market died, those acquisitions turned into financial quicksand. To fund it all, Perelman used high-risk junk bonds backed by Marvel's own stock. When the stock price crashed, the debt became impossible to pay. A brutal corporate war followed as investors fought for control of the dying company. In the end, the bankruptcy court handed the keys to new leadership from Toy Biz, the beginning of a very different Marvel. Emerging from bankruptcy as Marvel Enterprises, the new team focused on one mission: survive. Costs were slashed with surgical precision. Every dollar mattered. Executives even argued over the price of paper clips, because this time, discipline meant survival.
We have to cut somewhere. Even this paperclip is too much.
Are you serious? We can't function like this.
The cost reductions are mandatory, gentlemen.
Desperate for cash, Marvel began licensing its greatest heroes to Hollywood studios.
Stamped! The rights are yours.
Excellent. Here's your payment.
A profitable deal for all.
It was safe money, but it meant giving away the future. Spider-Man swung over to Sony Pictures. The X-Men and Fantastic Four landed at 20th Century Fox. The Hook smashed his way to Universal Pictures. The movies made billions, but Marvel got crumbs. For Blade, Marvel reportedly earned just $25,000, barely enough to print the posters. The first 2 Spider-Man films grossed $1.6 billion. Marvel's share was just $62 million. Marvel's leaders realized licensing was a dead end. To win big, they had to bet on themselves. In 2005, they struck a daring deal with Merrill Lynch, $525 million to make their own movies. The collateral? Film rights to their remaining characters: Iron Man, Thor, Captain America, and the Avengers. If the films failed, the bank would take everything Marvel had left. At the time, focus groups said Iron Man was a joke. Many thought he was a robot. But Marvel saw something deeper, a flawed hero seeking redemption, just like the company itself. They put their faith in a young producer, Kevin Feige, who had a bold idea, a shared universe of connected stories. In May 2008, Iron Man hit theaters and earned $585 million worldwide. The gamble had paid off.
Instantly validating the independent studio model. The post-credits scene featuring Samuel L. Jackson as Nick Fury promised something unprecedented, an interconnected web of films leading to the Avengers.
Seeing the potential, Disney CEO Bob Iger moved fast, acquiring Marvel for $4 billion. Critics said Disney overpaid. History would prove them spectacularly wrong. With Disney's global power behind it, Marvel scaled the Marvel Cinematic Universe into a cultural force. Phase 1 proved the universe concept, culminating in The Avengers 2012, which earned $1.5 billion. Phases 2 and 3 expanded into space operas and political thrillers, ending with Avengers Endgame at $2.79 billion, one of the biggest films ever. Beyond theaters, Marvel conquered toys, games, and merchandise, generating over $1 billion a year in licensing alone. The streaming era pushed heroes onto Disney+, turning Marvel into a key engine for subscriptions worldwide. Even with recent box office struggles and signs of superhero fatigue, the machine still runs strong. Marvel remains the highest-grossing film franchise in history, now valued at over $50 billion, more than 12 times Disney's purchase price. Lesson 1. Don't sell the farm. Licensing saved Marvel, but owning their characters made them rich for generations. Lesson 2. Control your costs. Financial discipline after bankruptcy made the comeback possible. Lesson 3. High risk, high reward. Betting their last heroes was a burn-the-boats moment. Succeed or disappear forever.